about oscillators exposed. So we will be presenting you some oscillators that maybe you don't know of, that you haven't heard of, but surely that can help you in your trading. Just before we start, before this disclaimer, I need to state that online education materials are developed by Demarker AS Estonia for a global audience. Therefore, please take into consideration that the information in this session may not be suitable for everyone. To get a corresponding information on charting conditions and any other detail, please visit www.admiralmarketsglobal.com, select your country of residence, and contact an appropriate entity. Also, a standard risk disclaimer explaining all the risk associated with Forex market, and by proceeding further with me, you are agreeing to all risk associated with Forex market. Also, Admiral Markets UK Ltd takes no responsibility for the information accuracy. The analysis represents a personal opinion of the author, it's me, and in this case Chris Swarzik, and in no way it represents the actual suggestion for the trade. These are not AM UK's opinions, and the website in the video is not Co-UK website but the Global Use Com website. Forex is risky business, and this is a personal opinion. This webinar is considered for informational and educational purposes only. So with that said, we can proceed. Okay, these are, yes, this is the wrong slide. So what are Forex oscillators? Today we will talk about a lot of oscillators, especially Parabolic SAR, rate of change, elder rays, Demarker, range expansion index, which is one of greatest and ultimate oscillator. But just as we start, we need to define basically what oscillators are. Oscillators are synchronous or anticipatory indicators. Those are usually considered as leading indicators. So oscillators are usually considered leading because they are also following the price. So we need to see the price, then by comparing price to oscillator, we usually detect divergence or any other price pattern that can show on charts. We use it not just to discover overbought or oversold conditions, but to foresee breaking point in a price movement. They tend to generate false signals also, usually in strong trends. That is why we don't need and don't use oscillators by default on a naked chart. We need other confirmations. Usually, as you remember from our webinars, we need a leading indicator, a lagging indicator, and usually important pivot point levels. So the ideal system or strategy consists of a leading indicator, a lagging indicator, for example MACD, which captures the momentum, and price levels for stop losses and taking profits. If you put much of indicators on the chart, that tends to clog them, and it's not advisable. Also goes with Forex oscillators. We don't use more than 2 oscillators by default, because usually you know the law of nature. Whichever of indicators has a bigger rate of success, it will work first. So basically, you don't need more than 2 oscillators. Ideally, it's a leading and a lagging. Also, oscillators provide signals about trend changes and trend strength. We can read through trend changes and trend strength by having an oscillator placed on our charts. Some oscillators are mathematical transformations of price, and on graph they mirror price action. When the lines start to move apart, it can be a signal of a losing momentum. MACD is useful for that, because MACD, by multiple time frame analysis, capture the momentum. We had a webinar about it, if you remember, so please go on our site and watch recorded webinar about momentum and how to capture the momentum by using MACD. Okay, Traders usually work with standard oscillators. Those are stochastic, RSI, MACD, and CCI. And in our first webinar about oscillators, we were talking about those basic oscillators, which are basically integrated into Forex platforms. And those oscillators come by default. Stochastic, RSI, MACD, CCI, those are all default indicators. But sometimes, as you know, because Forex is endless sea of knowledge, endless sea of algorithms, indicators, mathematical calculations, whatever we do on Forex market, that can be described as basically speculation, as we are doing basically, we are working with a market which does not have a central unit. It's not centralized, so stock market. And basically, because all of those fluctuations and volatility, traders are finding their safe haven to non-standard indicators. They try to modify existing indicators into something new, and by modifications and by using meta quotes codes, they basically are protecting their proprietary indicators and methods. But as you already know, none of the indicators and none of the oscillators works 100%, because we always need to use a common sense when we trade the market. So if you remember, I will always remind you, when you trade, don't over-leverage yourself, don't over-leverage your trades, don't go stressed into trades, don't rush into trades, and don't search for a holy grail, because holy grail is within you. Holy grail are you. It is you. There is no indicator and no method which can be 100% perfect. Now I just want to thank you for your support concerning latest comments of session recaps and my analysis on different pairs. I see that many traders really got 100 and 200 pips of the last session, and you know, I will always try to give you best possible setups and best possible analysis by applying those advanced Camarilla MACD methods. So basically, even I, of course, am not 100% right, but it doesn't matter as long as if you use your money management, and as long as if you're more than 70% right, you will be profitable. So let's get back to oscillators. None of the oscillators are 100% perfect, but by using them according to the methods which we have given you, a leading indicator, one lagging indicator, and a price action, you should be profitable, because those oscillators work in synergy. So there are also additional oscillators which are worth mentioning, and I will mention it now. Those are, of course, oscillators which are they're in no way weaker than standard ones, which we were talking about last webinar about oscillators. But those are oscillators which are not so standard as just except for Parabolic SAR, PSR. But basically, all of those other indicators are not integrated in a MetaTrader Forex, except Elder Race. We will talk about it in a couple of minutes. But all of those indicators, you can search for it on the internet. You can search for it, and you can download it. I personally search for the Range Expansion Index, REI, and it can be downloaded. Also, Ultimate Oscillator, Demarker, you should search a bit about it. Elder Race is integrated, and Rate of Change, you can download it. Okay, Rate of Change sometimes it acts like a RSI, but there is a bit of difference between RSI and Rate of Change. So for Rate of Change, you can download it. It's very easy to be found on the internet. It's not hard to find it. So maybe you didn't know, but a Parabolic SAR indicator, or PSR, is an oscillator. Is an oscillator, and basically it was developed by Wells Wilder in the year of 1978. since that was no era of internet, it wasn't there wasn't many computers, and there wasn't supercomputers as today. Wells Wilder presented it in his trading book, but also we need to say that PSR has withstood the test of time. That indicator really withstood the test of time, and you can find it in many different and profitable systems and trading strategies, because basically PSR or SAR follows price and can be considered a trend following indicator. Once a downtrend reverses a startup, SAR follows price like a trailing stop. So the stop continuously rises as long as the uptrend remains in place. In other words, SAR never decreases in an uptrend and continuously protects profits as price advances. That is, in downtrend, same is with uptrend. You usually will spot a PSR dot below the price, and it acts as a trend indicator. It also acts as a trailing stop for you. So it's maybe the most, how can I say, it's not the most primitive method of trailing stop, but its inception came in the year of 1978. So basically, you know, the trailing stop indicator, which was developed that time, almost 30, almost 40 years, acts really as a good test of time. So it can trail your stop in a certain systems. So when using all of those oscillators, you should know that you cannot use all of them alone without any other confirmation. These are all general guidelines for using oscillators. So we may find it in later systems we will be presenting you. So any of those indicators which are mentioned are worth having in a system. But as you know, when you're trading a method or a system, you need to have a synergy of different indicators which will pinpoint the right entry, the right exit, and or a trailing stop. Okay, so all of them can be very valid, but you need to find a synergy between them and other indicators. PSR worked great, as I know, of a system called Dynamite TNT. It was a system which was basically, I think that the basis of the system were found in some maybe 7 or 8 years or maybe 10 years ago. I cannot remember correctly. And in the first 2 years, PSR in conjunction with multiple MACD on the chart worked wonders. But markets have changed, and also that system, as I mentioned that a couple of times, that system unfortunately does not work anymore. So that was a very profitable system when it began as a trading system, but today it doesn't work anymore. So Dynamite TNT, it's called. I have tested it, and the results were bad. But PSR can be found in many other systems. Maybe in some other webinars I will show you how you can effectively use PSR with MACD, but on MACD window. So that is a scalping method, and I will be presenting you probably in one of our next webinar. So basically, PSR still has its availability and usability in many different systems and methods. Also, the indicator acts as a guard against the propensity to lower a stop loss. So basically, once the price stops rising and reverses below SAR, a downtrend starts and SAR is above the price. So SAR follows prices lower like a trailing stop. And the most important thing is, because SAR never rises in a downtrend, it continues to protect profits on short positions. So whether you're using a PSR for a trailing stop or for a trend confirmation, it usually works the same way. So this is the common usage of Forex Parabolic SAR trending strategy. The common usage, we have different entry rules on that, and you see that when parabolic stop and reverse point is below current price, we go long. If price subsequently touches the stop point, close the long position and go short on the open of the next bar. Stop and reversal point is the stop loss and point at which the strategy flips direction. when price hits the stop and reversal point, close the trade at the open of the next bar and flip direction. So those are general rules for Forex Parabolic SAR. And basically, you can see it on the chart. This indicator, as I said, follows the price, but it also giving us, not just giving us a trade direction or a trend, it gives us a trailing stop which we can use it. One of good strategies of Forex PSR indicator is 4-hour strategy, where we use a combination of PSR and awesome oscillators. So there is a good strategy on 4-hour time frame which has really good use of PSR. So PSR is a good indicator still, and it has indeed stood the test of time. Rate of change indicator. So as I said, it's a bit of similar to RSI, but you already know that prices drop and grow in cycles. This cyclic movement is a result of change in investors' expectations and the price control fight between bulls and bears. Price rate of change, or rate of change, ROC, reflects this movement like an oscillator, measuring the difference in prices in a certain period. ROC grows if prices grow and drops along with them. The more the prices changes, the more ROC changes. ROC can be used to isolate displacement, which in turn can signal a breakout scenario. A short-term ROC is usually used to identify these breakout opportunities. It's 10. ROC can also be used to counter trend trade. A longer-term ROC identifies displacement, which signals an overbought or oversold position and an abnormal movement away from its mean. So this means it has the probability of reversing back or correcting. So it's a bit of similar as RSI, as you can see on the slide. By watching ROC these extreme movements of the price, we usually anticipate a probable breakout or a counter trend trade. So basically, what ROC does is it's a bit of similar as overbought oversold indicator, as it measures the peaks. So for ROC indicator, it's important to have a peak like this and a peak like that in a downtrend, so you can reverse the position. Rate of change is not so commonly used in Forex market, but the indicator still exists to be used in Forex, and usual replacement for rate of change is RSI, but it works almost a similar way. Now, elder race. Elder race is one of indicators you probably didn't know that exist on Forex platform on MetaTrader 4 by default. That indicator combines basically two indicators together. So elder race technical indicator combine the properties of trend following indicators and oscillators. They use exponential moving average indicator, EMA. The best period for that is 13 as a tracing indicator. The oscillators reflect the power of bulls and bears. So to plot the elder race, 3 charts could be used. On one side, or 3 windows, we have exponential moving average, that is on main window. Below main window, 2 other indicators. Those are bull power and bear's power. So we need to use bull's power, bear's power, and EMA of 13. So then we have elder rays complete. Elder rays are used both individually and together with other methods. If using them individually, one should take into account that the exponential moving average slope determines the trend movement, and positions should be open in this direction. Bulls and bears power oscillators are applied for defining the moment of positions opening or closing. So this is bulls and bears. You have I plotted this on my chart, bulls and bulls, but you have also bears. You have also bears indicator on MetaTrader 4, so you can plot bulls, bears, and EMA of 13 to have elder rays on your charts. Those are general rules for elder rays. So, buy if there is an increasing trend determined with the exponential moving average movement. The bear's power oscillator is negative but increasing at the same time. The last peak of the bull's power oscillator is higher than the previous one, and the bear's power oscillator increases after the bull's divergence. You will print screen, you will print screen later, so you can test this indicator. It can be good, and it is good. Sell if there is a decreasing trend, which we determine by EMA going downside, then the bull's power oscillator is positive but decreases gradually. Then we say that the last true of the bull's power oscillator is lower than the previous one, and the bull's power oscillator decreases, leaving the bear divergence. Do not open short positions when the bull's power oscillator is negative. Divergence between the bull's and bear's power and prices is the best time for trading. Okay, it is the best time for trading. So basically, what you need to know is these are general guidelines for LDRAs. Plot your EMA turning on the chart, plot bulls, plot bears indicator, and use these rules for a buy or a sell. So it is a good one. Next one, which we will talk about, is Demarker. Demarker technical indicator is based on the comparison of the period maximum with the previous period maximum. When the indicator falls below 30, the bullish price reversal should be expected. When the indicator rises above 70, the bearish price reversal should be expected. So basically, this is shaken volatility. This was also a wrong picture, because I couldn't find Demarker for MT4. Maybe it's paid indicator, I don't know, but I was searching for that indicator and I couldn't find it. But it's the same as this picture. When just imagine that this is 30 and this is 70. So basically it looks the same. When the indicator falls below 30, we can expect a bullish price reversal. Same when the indicator goes above 70, we can expect the bullish price reversal. So you can search for it. I tried, but unfortunately there was no good indicator. One was protected, so I presume it is paid one. So you can maybe search for it and find it. So basically, Demarker indicator is an indicator which has overbought and oversold conditions and acts as a reversal indicator. Then this is one of my favorites. It's called REI, or Range Expansion Index. So Range Expansion Index is a relative oscillator indicator that measures the pace of the price changes and signals overbought and oversold states if the price demonstrates weakness or strength. It was also developed by Tom Demarker as Demarker indicator and explained in his book, The New Science of Technical Analysis. The value of the indicator changes from -100 to +100. The Range Expansion Index is an enhanced oscillator because it tries to remain calm, and this is the biggest advantage of the indicator. It tries to remain calm during the range trading and indicates signals only when a significant peaks or bottoms are spotted. Default period for Range Expansion Index is 8. So when the price goes above level 60 and declines below it, the bearish signal is given. When the price goes below level -60 and then rise above it, the bullish signal is given. So I find this indicator rather inaccurate, like all oscillators, but on lower time frames it can be quite useful. So on M15, M5, I saw it in the action on M15. So basically lower time frames are quite useful for this indicator, and it is really good as an overbought and oversold indicator. So you can see basically how it works on M15. So if we see a peak and we see important level, of course, then we see that impending sell is coming. If we see a peak at the bottom and important, as in this case, this was a triple bottom, we can see that impending buy is coming. So usually the price and oscillator reacts quickly because it's overbought, oversold conditions, and it's solely used as a counter trend indicator, where usually those peaks are identified easily when it's below minus 60 or above 60. So range expansion index can be downloaded on the internet, and it's quite useful if used on M15 and with, of course, important support and resistance around important support and resistance levels. As you already know, of all things we talk about those indicators and changes, you probably know that you need to use another confirmation signals for indicator strength to be valid. So another confirmation signals should be used. Okay, you need to have another indicator to confirm, but solely as a sole indicator it can also do quite good, as you can see how it spots a probable reversals on lower time frames. And now finally, ultimate oscillator, before I present a webinar to my colleague Chris. So this is the last oscillator I will talk about it. I will talk about, and ultimate oscillator is the name. So Larry Williams created it in the year of 1985. So the oscillator uses 3 different time spaces or settings that you can set manually. On default, they are equal to 7, 14, and 28 periods. And Larry Williams recommended that you should open a position when a divergence appears. By his recommendations, you should buy if a bullish divergence appears and the prices have reached a lower minimum that hasn't been confirmed by lower minimum of the oscillator. So the same principles with MACD, with classical divergence rules apply. So for this oscillator, you need to apply the same rules as with all oscillators, with all divergences. So basically, you know, we talked about bearish divergence, bullish divergence. You know what divergence is. So the thing is that applying divergence on ultimate oscillators work good. So basically, you will plot ultimate oscillator with these settings, 7, 14, 28, and then you will need to spot the divergence. I don't know if there is an automatic ultimate oscillator divergence indicator. There is probably an indicator which can be bought, but that indicator, ultimate oscillator, works best on a divergence setups. So basically, the same thing applies with all the oscillators concerning divergence. You all know what bullish is: hidden bear, hidden bull, regular bear. It's all the same. So those are general guidelines. Use it with divergence, but also you can close long position if the oscillator rose above 50 and then falls below 45, or the oscillator rises above 70 and drops below 70. Sell also on bear divergence, and you close short positions if the oscillator grows above 65 or the oscillator falls below 30. So if you plan to use ultimate oscillator, you can take a screenshot of this chart. You can use it as a divergence indicator with these rules. You should apply these rules, and when using it as divergence indicator, you need to basically know particularly about counter trend. I advise always using it if you use it as divergence close to support if you go long, or close to resistance if you go short. So that is my part of oscillators. So you can find all of these oscillators freely on the internet, except I couldn't find Demarker. You can search for it maybe more thoroughly. But basically, all of these indicators are very good in conjunction with other methods for trading the price. Now I will present the microphone to my colleague Chris, and he will be talking about other indicators. So please pay attention. Thank you very much for listening to this, and try to find it freely over the internet.
Thank you so much. Great stuff there from Nenad. And now I'm going to continue with the Oscillator webinar. I'm going to focus on the ADX, in fact. So we had a great explanation of various oscillators from Tarantula, different elements of a wide scale of oscillators. In my session, we're going to dive into the ADX and take a look at that one more intensely. ADX is also from Welders, as we'll find out soon enough. So let me put this on the slideshow from the very beginning and a bit bigger. Good. So the risk disclaimer, we already discussed about that. So we can move on to the ADX methodology. So what is the ADX indicator? Basically, it's called the ADX because it's average directional movement index, or some say the average directional index. It's been created by Welders back, as Donata was already saying, back in the day in 1978, where there were no computers really that much accessible or available. So that's quite something. The book introduced it. It's called New Concepts in Technical Trading Systems. If you were to be curious, you can take a look. And his work also, as you already know now, includes other elements such as the average true range, the Parabolic SAR, and the RSI together with this ADX. So he has an interesting mix of indicators, right? It's similar to, in that regard, to Bill Williams, who also has his own name, basically a folder name. If you look at the Admiral Markets MT4 platform, you will see when you go to indicators a map of Bill Williams, right, with his own indicators. To me, in that regard, Welders could have the same, right? He has also a list of indicators that he has developed, and all of them very interesting as well, right? So personally, I have to admit that Bill Williams is my favorite, these indicators, but these set of indicators that he uses would be also a very nice second runner-up, I think, in my opinion. Very interesting mix there. As you know, the last webinar I already talked in detail about the oscillator, so don't want to talk about that right now. You can take always a look at that particular webinar, though, which can be found in the archive of the Admiral Market website. So you can always revisit that and take a look by looking at the archive. The ADX methodology was created for commodities Forex, so that's a good thing. It was indeed created with the Forex in mind. The daily price as well, there's basically, the thought was to look at the intraday pricing here. That was the idea of Welders. But apparently it does its job too in other markets such as stocks. Now the reason I like the ADX is that it has a cool double function here, all right? First of all, there's a bit of a typo there, apologies, but it says focus on measuring strength and weakness of a trend, right? So basically the momentum. How strong is price moving in a new direction? The ADX will give you a value and will give you an idea how strong that value is. But it also gives information about the trend direction, and that's the cool part, because oscillators are known for overbought or oversold. That's their classical function. The awesome oscillator and MACD, they give indication about trend direction, about divergence. They too, of course, because of the divergence aspect, do give a bit of a momentum strength and weakness, obviously, but it's not the same as an oscillator that gives a pure oversold or overbought rating, right? So the ADX, in a way, combines those two, right? It combines the classical, maybe trending, and the classical oscillator function, right? The lagging and the leading part of it come together here a bit. So that's the great thing about it, all in one tool. So that's really a nice advantage. So at the bottom, just emphasizing that that's basically the ADX indicator, and it quantifies the strength or lack of strength in a price, right? So let's take a look at an example. Price on the top, ADX of course at the bottom. The blue line is the ADX itself. The red line is what is called the minus directional indicator. and the green, the plus directional indicator, or plus DI and minus DI. Okay. Now we'll dive into what that exactly is in just a minute, but for the moment it's important to know what these blue, red, and green lines are, so that we have first basic understanding of the oscillator, or the tool, right? The tool and oscillator. Okay. Now how is that calculated? The ADX compares the difference between two consecutive lows with a difference between the highs. All right. I think there's a bit of a typo mistake there. Basically between the two consecutive highs and the difference with the two consecutive lows, if I remember correctly. So I think it was late when I made this, I can see. So ADX measures trend strength without regard to the direction. All right, so I need to emphasize that. It just shows how strong the trend is. It doesn't say anything about the direction. It just shows, is there a trend or not? So let's go back to this example. Now how does it show that? Right? Basically, a higher value, the stronger the trend. So when you see the peak on the left here, that means there's a strong trend going on. Okay? And whenever it's dropping or below 20, the trend is not strong. It doesn't say anything about the direction though. That's still something that we have to work on. I have to investigate, have to decide ourselves through other methods. But at least we have that information. With that information in mind, once you know there's a strong trend, right, this is important information for all traders. Whether you are a trend following trader or a reversal trader, right? A reversal trader still needs to have a trend. If there's no trend, you can't trade a reversal. What would you be reversing, right? So it's important for everyone, even for the range trader, because the range trader is looking for a lack of a trend, right? So even a range trader knows that if there's no trend, that's actually the environment that that particular trader wants. It's always important to optimize when to use your trending trade system and when to use your reversal trade system and when to use your range trade system, if you have those three or two or maybe only one, right? But it's important to match the environment as much as we can with the strategy we are using. Of course, this process is never perfect, and we'll always take trades that have a valid setup, but the market isn't just moving in the environment and structure that is well suited for that strategy. We can't be 100%, as Tarantula already said earlier. Alrighty, so I already talked about those levels. Let's dive into that a bit more. The ADX basically above 25 is a strong trend. When the value is lower than 20, there is no trend. And between 20 and 25, it's kind of a gray zone. Many traders, though, actually use 20. All right, they use 20 as the key level. Now, I think that Wilders was actually using 25, but I think that in general, the market, the traders who use this mostly use 20, as far as I know. So, what other levels are important? Well, you won't see the ADX really drop that low. I mean, actually, the Eurodollar in the weekly, I think it's pretty low. There's not really much trend, or was it the monthly? I don't know. A higher time frame. That's just, you won't see it below 0, first of all, obviously, but it really doesn't matter if it's 10 or 12. It gives the same value. It's a low trend. There's no trend, right? But the higher you go, then there is a bit of information, because if you are close to 50, then it does give a good information regarding the fact that there's been a pretty decent extension, a pretty decent trend, right? A strong trend, and maybe we'll get a retrace. Now, I'm not saying the ADX definitely can go up to 70. It happens. But 50 to 70, you are getting into a zone where, it could be the last push before we get a bigger retracement, and the ADX retraces also as well, besides price, right? The trend basically has been pushed to such a degree, it's getting overextended, potentially. right? It doesn't have to be. It doesn't have to be on the spot 50 or even 70, but in that zone, roughly speaking, you can think about, that it's getting to a pretty strong push, and it could be ready for retracement. Then you want to look for other things. You want to look for confirmations, right? Maybe divergence on the MACD that you use. Zoom into a lower time frame to find a double divergence and some 15-minute pin bar. There are other things, of course, that we need as a support, but this is one way of knowing, maybe also not necessarily to enter a reversal trade, but also when you could maybe exit your, with the trend trade also, not to forget. So those are the levels that are important for ADX. Let's take a few examples here, okay? Your dollar 4-hour chart, the pink one is 20, the gray horizontal line is 25. This high is about 67, okay? So once again, this is only trend indication. So we can see the move up above 25. This was a good spike, bull flag, good ADX continuation, right? That continuation though, what happened with that? No follow through, right? Didn't cross the 25. In a way, divergence between the ADX. And I'm sure there will be divergence on the MACD and the oscillator there, okay? And that, of course, leads to the reversal, right? Then we get the fall, and the fall is strong. Now, you got to be careful that the ADX doesn't cross the 20 or 25 immediately. You want to look at the angle of the ADX as well, because sometimes the cross happens later. Look, this cross about, what is it, about here, about halfway to the area, right? That you have to be aware of. But when it reaches a high level like this, look at that, and then you get still the bear flag and follow through. And then you get the divergence again, and then a bigger correction, okay? So you want to be aware of the lag that's potential, okay? But in any case, this was already above the 20 when it started to fall away from the top here as well, by the way. The time frames, you could really use it. It provides information on all time frames. I haven't used it under 1, scarcely under 5, but 5 minutes, I've looked at the 15, an hour, 4 hour. Those are the time frames I use it the most. Weekly and daily, not so much, but it's because I don't really, it's a bit of a, yeah, I'd rather look at price action because an ADX on the daily has a little less value for myself as an intra-week trader, if you know what I mean. It's not that it's not useful, it's just my time frames that I use wouldn't really stack up and be that useful. So in the trading room, right, or basically that we have with Admiral Markets, right, that I'm hosting Tuesdays, Wednesdays, Thursdays, I use the Awesome Oscillator. And the reason why I only have the Awesome Oscillator is just to keep the charts simple and clean for the viewers. But if it were up to me, I would definitely have no objection of adding the ADX, for instance, to that. It's just that it eats away the chart a bit and price becomes less visible, and I don't want to over-clutter the charts. But maybe we can still add it in the trading room. Add the ADX, something to think about. Let me know what you think. The daily chart. So here too, an example that there is a bit of a slow start with that ADX. You got to be aware of that. You definitely want to see it maybe as a confirmation of what you think is going to be a trend, or is a trend in motion. There's a trend in play, and eventually the ADX crosses the 25. You see the 25 is a bit slow, right? Look at the second green line. It's already halfway. The trend is halfway. If you look at the 20, though, it's already earlier, right? It's about 4 days earlier, right? Although we had already a cross here prior to that. So it's a good trend strength confirmation. And this was a good uptrend of the dollar yen, right? It made a decent 900 pip push. So there's nothing wrong with 900 pip up move. And there's a good pips to be catched or caught if you're swing trading this or even day trading it to the upside. So the ADX daily showing, if you look at the blue line, showing indeed that upside strength. And then at the tops here too, the potential divergence, right, between these tops and the tops there. So don't forget, this is specifically, we've been only talking about the blue line now. We've been only talking about the power or lack of trend. The trend or lack of trend indicated by blue line being below 20 or above 20. And in this case, it reached 57, just to give you an idea. Right? I already talked about that 50 to 70 zone. So now we're going to talk about the red and green one, because you can also have an idea about their direction as well. Okay, because now we've only been talking about, oh, what happened there? Sorry about that. Now we've been only talking about the strength and the momentum. All right, the strength of the trend, basically. Now let's talk about the trend direction. That is the plus DI and the minus DI. These two, the red and the green line, they identify the trend direction. That's the cool thing about this one. So you got the plus directional indicator, plus DNI, and the minus directional indicator, right? Sounds maybe fancy, but what it boils down to is that if the plus is higher or larger than the minus DI, then the upside has an edge, right? So the uptrend, there's an uptrend basically if plus DI is bigger than minus DI. The opposite is true if minus DI is bigger than plus DI, then the downside has an edge. Okay? The crosses of these two lines indicate that trend change. So the trend change is very straight and straightforward, and simple and straightforward. Now, I wouldn't take it as face value. Just because there's a trend doesn't mean it's an entry. There's always that difference, mind you. In the trading room too, we talk about 5 steps. We talk about trend direction, how to classify opportunity, how to check out for filters, how to establish triggers, and then how to actually enter. Trend direction, and if there is a trend, is still part of step 1. Right? So just because there's a trend doesn't mean it's an automatic entry. There are other steps that traders should have in their trading plan. But with the ADX, the trend definition is straightforward. DI and D plus, their relationship would be the trend, and if they cross again, that's the trend change. All right, so when you combine this, basically, you have the advantage of looking at both the direction and strength of the trend in one indicator, as already mentioned earlier. So the ADX, let's focus now on the green and red line. The green is the plus DI, the red is the minus DI. That's kind of the most logic, of course. I think minus being the bearish and green being the bullish. So let's take a look at a few examples here. Green is above red, so we're in uptrend, right? Here, though, we have red above green, which happens because we got a bigger retracement, okay? Now, of course, that doesn't mean we're in a big downtrend. It's just a retracement. That's something where our chart patterns recognition skills kick in, right? The fact that if you recognize chart patterns will help because you can see it's a bull flag, and therefore you will take the discretionary decision to say, okay, the fact that the red is above green is actually just a retracement. Okay, that's something, of course, that screening time will help with, right? And the better you are in chart pattern reading, the easier this will be. But you can get better by doing more time, spending more time with these chart patterns and looking and finding them on the chart, going back into history and putting the lines on them and practicing them, definitely. Now let's continue. We get an uptrend here, continuation, and again the retracement. So the red crosses the green, then we have a green crossing the red, and it's an uptrend, definitely. Right? Again a retracement, where we have red below, above green. So you can see nicely this sequence, right? So in that regard, the ADX nicely confirming the trending part and the retracement part. And then if you look at this 4-hour, look at the blue one just to emphasize good reading, strong angle, strong trend. This, I don't know, I was doubting about sharing this. It's a bit boring maybe, so bear with me for 1 second. But basically, just to give you an idea, what is that plus D and what is that minus D for those who are curious? It is basically, it's positive because the current high minus the prior high, so it's just the high now minus the previous high, very simple, okay, is greater than the previous low minus the current low. Okay, so if the current high in the euro dollar is 135 and the previous high is 133, okay, that's 200 pips. If the previous low is at 132 and the current low is at 133, that's 100 pips. So 200 is bigger than 100. The difference between the tops and the bottoms is bigger. That's why we have the plus D value, right? That's why there is a positive momentum. So all it's calculating is the difference between tops and bottoms. And if there's more distance between the tops, it's bullish. If it's less distance, if there's more distance between the bottoms and the uptrend, right? Uptrend, then there's weakening basically of that momentum. So that's what it does. All right, so minus D is the opposite. Same story, but just the opposite, okay? Now, Mr. Wilders, had Wilders, sorry. Now I got it mixed up. Yeah, Wilders. Ah, I was right. I got mixed up with his first name, Willis. Oh, doesn't matter. Trading system. Created this trading system. The value of the ADX should be above 25 or at least 20. Okay, so we want that trending environment. A long occurs when plus DI crosses above minus DI. So actually, I actually used it as a trading system, interesting enough. Now, I never back-tested this using this particular system, so treat this with caution. As always, look into it yourself and see if it's for you. I personally wouldn't do this personally as an actual, rigorous trading system, but this was mentioned as the potential system, so I wanted to share that with you. Wilder placed his stop loss under low of trigger candle. So the trigger candle, the day candle in this case, okay? So the candle low in uptrend was the stop loss. And the trend remained in force as long as the low did not break. So let's take a look at the other things that are important. A cross of plus DI below minus DI would not signal a change and would be treated as retracement until the low is penetrated. That's very important. So just because basically if he went long when the ADX was above 20 and the cross came, okay, then he would enter, but just because the minus DI, right, would recross, he wouldn't exit. That would just be a retracement. He would wait for the low of that candle to be broken before basically exiting. Okay, so if we go back to this example, right, we had many retracements here, right? Those would not be, the potential entries right away. He would wait for that low to be broken. Not sure what time frame that was. This is 4 hours, so we would have to, this is the other time frame. Probably on the daily chart, maybe, not sure, this low could have been broken. This one for sure, this one probably not. It depends how big the retracement is. The other thing here, 3B, the trend will be, or will most likely strengthen when the ADX turns. Okay, so at the beginning, of course, when it's just starting out, that's where the most power is. And he used the trading stop to lock in profits along the way. Okay, so let's take a look. The green line's indicating a cross. Then we just need to wait for the ADX to go above 20, and that will be the entry. And you could then trail stop the daily lows, for example. This is a pretty loose system, I would say. It's a rough system still, so you definitely want to. You can use it as a base for your own development, but you might want to look into being more precise or adding discretionary tools to that. These are other tools that Wilder used, like, for example, Parabolic, ADX that we already discussed, ATR, and RSI. So if you use all of his tools, this is how your chart will look like. Pretty nifty. Right, awesome stuff. Get a lot of information out of that. But as always, the most important is how you use the tool, not the tool or indicator itself. Right? Tool or indicator itself is never the key factor. True success, as Tarantula already said, it lies within us, not within the indicator tool. It's our knowledge about how we use the tool indicator that does it. All right. So the tool and indicator is, of course, very important. Right. We must choose something that is good. But once we've chosen something that is good, then we have to practice and know how to use it. And we have to practice and get to know it and get better at it. And we cannot just say, okay, 2 days I tried that, it didn't work. I'll try the next one. That's never going to lead to that extra depth that we need to have. Okay, well, that wraps it up. Let me know if you have any questions for me or Tarantula, of course. In the meantime, I'm going to show you this schedule. A learning lab with Tarantula Monday and Wednesday, and of course the day together. And then we have also trading lab Tuesday, Wednesday, and Thursday. So don't forget to tune in at these times too. Well, maybe we had a bit of interesting oscillators, I think. I'm not sure if there's any need to show other oscillators. I think that we've really covered in these two webinars the most important ones, I think. But if you have any suggestions, by all means, let us know. Maybe a question for you. I don't see any questions from the public, but maybe a question for you. For instance, what type of webinar, webinar would you like to see in the future? What topic would interest you? I know we've asked many times, and maybe your particular topic hasn't arrived yet, but bear with us. We have a lot of ground to cover together, so don't hesitate to mention it again.
Yeah, Chris, as I can see, people would like to have more strategies explained and more Fibonacci levels. So we can do, if you agree with me, maybe in one of next session we can do also Fibonacci trading methods and other trading methods presented, because I presume they possibly want to see some of those oscillators which we presented in a particular method or a system. So we can do that for you. If you want that, we can cover that also, no problem.
Definitely. The webinars are already planned up to the first week of March, but then yeah, so that we can't do anything about that, but in March.
But in April we can do that. We will look for nice and good systems which have Fibonacci levels and also some of oscillators that we mentioned, or we can come it by ourselves, so we will present you, no problems. Yeah, okay guys, if you don't have anything to add or ask us. Hello guys, I had something like Demarker lines, but I guess that is a different thing from the oscillator. PSR, kind interesting indicator, looks to me like to know more about it. Okay, starting from April, we will use some of these indicators which we presented you in a system. I know which method we will show. I remember of a good strategy concerning PSR and those rate of change, so I will show you, so don't worry. Just we need to finish with our set of webinars in March, then we will continue with it on April. So we will show some nice strategies, don't worry, okay? Got you all. So Chris, I think we can conclude the webinar.
Yes, indeed. Wish everyone a great weekend in the meantime, and looking forward to see you next week.
Yeah, looking forward to next week. We will have session recaps, many interesting setups, live trading rooms. Be with us, follow us, and expect a new material within each month. So thank you very much, and talk to you very, very soon. Bye.